Ant Group is one of the biggest private companies in the world, and it was about to go public in a dazzling record-setting debut until it couldn't. And then suddenly things went very wrong very fast. There have been a lot of news that the Ant IPO would be delayed for over a year, which goes to say a whole lot about the level of reforms that the government thinks the company needs. The key regulation has to do with Ant's super profitable micro-lending platform. The way it's set up right now, it mints money. China is about to chop it down to size. So let's talk a little bit about this product. But first, I want to talk a little bit about the Asianometry email newsletter. It's a new thing that I've been working on. And rather than doing another boring ad read, I'm just going to talk a little bit about something that one of the letters that I'm working on right now. Tell you so you can start looking forward to it. For a future newsletter soon to come out, I'm going to go back to one of my most popular videos, the Huape Explained, and I'm working on right now sprinkling in a few more interesting other things that I was not managing to be able to fit in last time. Right now I'm trying to decide if I want to add more about the Taiping Rebellion, or about their cuisine, or about their migration to Malaysia, Thailand, all the other parts of Southeast Asia. That's a really exciting one, a really interesting one. I'm looking forward to sharing that with you guys. So yeah, I hope you'll find it worth subscribing, and I'll hope to try to make it worth your while. You can expect a newsletter every 4 days at 1 a.m. Taiwan time. So much thanks. In its IPO documents, Ant Group organizes its business lines into 4 categories: digital payments, credit, investment, and insurance. Digital payments is the Alipay stuff. It processes payments between buyers and sellers, kind of like PayPal. Credit tech is the credit business and the focus of this discussion. In the IPO documents, it is described as, our credit tech services address the unmet credit demands of unserved and underserved consumers and small businesses in China. We openly collaborate with our partner financial institutions through our technology platform. We originate loans which are then independently underwritten by our partner financial institutions. As of June 30th, 2020, we worked with approximately 100 partner banks. We generate technology service fees from our partner financial institutions that are based on the credit balance originated through our platform. Our approach is not to use our own balance sheet or provide guarantees. This segment also happens to be Ant's flagship money machine. It grew 59% in the first 6 months of 2020, and it now contributes some 40% of Ant's revenues. It's likely quite profitable. The key consumer product behind this credit tech platform is a service called Huape, which is literally translated as just spend. There's another one called Huape, which is similar, but I'm going to focus on Huape. Huape is called a microloan product, but from the perspective of the consumer, it acts like a credit card. Huape targets young internet-savvy users who buy things using Alipay. Users who choose Huape to make a purchase inside Alipay set it as their default. So yeah, it is a lot like a credit card. We can talk about the interest fees. Huape's first month, 40 days actually, interest is free. Then after that, the interest rate goes up to 0.05% a day. So every day you carry a balance on this thing, it adds another 0.05%. You can pay that back monthly or in installments. If you pay back your loans, then its smart machine learning algorithm decides that you are a creditworthy customer and steadily raises your limit. And also makes money from merchants who pay a processing fee, 0.8 to 1% of the transaction, to be featured within the Huape system. Presumably, the convenience of offering Huape means that consumers are more likely to buy from you. Ant does not make money from the loan or the loan's interest. Like as its prospectus says, Ant does not lend its own money. It's lending the money from its partner banks. There are over 100 such banks, and also makes fees securitizing and selling those loans to investors, kind of like with the subprime mortgage thing. Yeah, but it's not that much. I think it's about 10%. This way, Ant presumably does not take on the credit risk of the loans that it makes. Partnering with the banks also subtly co-ops resistance from the financial industry by cutting them into a piece of business flow. So just what really is this thing? If the above sounds a bit familiar to you, then you're not far off. If you phrase it in the way I just did, Huape acts kind of like Visa or MasterCard. Visa and MasterCard are payment networks that help facilitate online and convenience payments. They do not issue the loans themselves. Those are done by the bank issuing the card. So JP Morgan Chase for my Chase card. Visa and MasterCard provide only a network that connects buyers and merchants, and for the convenience of facilitating the transaction, they take a 1 to 2% fee. If you believe that Huape is Visa and MasterCard, then it would be an amazing business. Visa Inc. is a $450 billion company. That company makes $23 billion a year in revenue, and over half of that revenue falls right to the bottom line as net profit. That's fantastically profitable. Furthermore, Visa does not take on the loan default risk from transactions on its network. But at the same time, there's a lot of things about Huape that differentiate it from just a simple payments platform. For one thing, Huape is so closely tied to the Alipay and Alibaba ecosystem. The app pushes the Huape product very aggressively. They regularly run promotions for it. For example, they randomly give away 50 cents free to a customer if they make Huape their default payment system. Taobao is the dominant e-commerce site in China, kind of like it's Amazon. If you want to make a purchase in Taobao, Huape is there to help you. Taobao will give you a small discount, small as 50 cents maybe, or offer installment methods to use Huape to check out. Do so, and then Huape becomes the default rather than the normal digital cash balance on your app, the Alipay app, which everyone uses. I don't think Visa has a mobile app that people use on a regular basis for payments. PayPal maybe, Venmo, Cash App maybe. But Visa also does not issue a credit card that is also a debit card and then makes the credit card the default every time you swipe at Walmart. And as many people know, defaults are powerful. Once Huape is the default, it sits on top of all of a customer's purchases. It is then that you start getting the horror stories about ordinary Chinese people finding themselves locked in a cycle of never-ending credit card debt. Regardless of whether they're Chinese or American, credit card debt can happen to anyone. Probably worse for Chinese since there are millions of people out there who had never grown up with something as convenient as a credit card. In addition, there is something to be said about the credit business's sheer size and the systemic financial risk posed by that size. The IPO documents say that the average outstanding balance as of June 30th, 2020 is just $295 or 2,000 RMB. But China is all about scale, and Alipay has some 700 million users. Huape is specifically used by 400 million people. Ant by itself is the source of some 10% of all loans generated by China's financial system. Its loan volume in the first half of 2020 was over 1.7 trillion RMB, which makes it far larger than any one bank, including any of the Chinese Big Four. Not to mention that these loans are going to act almost all the same since they have been all approved using the same algorithm. Think about the credit rating agencies before the global financial crisis. All of this is a little worrying. When you combine a general public unfamiliar with how debt works with a massive organization heavily incentivized to make as many loans as possible, you got a recipe for financial disaster. Ant so aggressively pushes Huape because Alipay otherwise does not seem to make money. The independent business magazine Caixin recently reported that Ant's payment business, the segment that kicked off Alipay in the first place, does not make money and is probably in the red. It used to be the company's cash machine, but then Tencent started WeChat Pay, and that kicked off a massive battle between the two tech titans. Huge subsidies and technology product costs were incurred to gain an advantage. Then in 2017, the government regulated that bank payments need to be routed through a government clearing system. This basically turned the business into a low-margin grind, kind of like how it is in the US. The Chinese government apparently did this as part of their clampdown on capital flight around that period of time. With their old transactions business pinched off, Alipay apparently decided to build a payment card network like Visa and MasterCard. But a card network is hard to build, and China already has one called UnionPay. UnionPay is no longer a monopoly, but it took Amex, Visa, and MasterCard half a decade to get a China license for their network, and the process is still not done yet. Alipay did not have the patience for that, so they created their own private credit card network, and let it grow to immense size without virtually any oversight. That's what they did wrong. Is it really financial innovation if it's just the same thing over again, but worse and not working as well? And for the potential of disaster, I think that's the side the Chinese regulators are taking right now. All right, everyone. Have a good evening. Take care of yourselves. Bye-bye.